What's up, guys? It's Dan from Coin Bureau Trading. Today we're going to take a look at why altcoin season hasn't happened yet and when altcoin season could finally come. If this is the kind of content that you enjoy, then be sure to smash that like button, subscribe to the channel, and ping that notification bell. Before we get started, do keep in mind that nothing in this video is financial advice. It's just my personal analysis of the crypto market. Your analysis could be different, and if it is, that's awesome, because the more difference of opinion that we have, the better traders and the better investors we're all going to become. So I guess I'll start by saying, some of you might say, wait a minute, this sounds pretty similar to Ben Cowan's recent video about, why altcoin season hasn't happened. And that's correct. I actually want to address a few points that he made in that video, because I think a few things are arguably pretty debatable there. But I'll start, I guess, by addressing the one thing that Ben didn't address in that video. And I think that a lot of people are wondering, when you ask the question of why hasn't altcoin season come yet, I think implicit in that question is why have altcoins underperformed so much? I'll just offer my theory on why that is. And it's a theory I think stands up to scrutiny. And that's that when the spot Bitcoin ETFs launched in early 2024, what basically happened is that existing retail investors from the previous cycle started buying altcoins, basically, you could say, earlier than usual in the cycle, expecting new retail investors to arrive at the end of 2024. Of course, when Trump got elected, it really felt like that was going to happen, but it didn't happen. And the result is that you've seen all these retail investors that bought altcoins aggressively in early 2024 and to a lesser extent in late 2024, they've all basically been slowly selling out of their altcoin positions, either selling out completely or rotating into Bitcoin. And that's basically why we've seen altcoins bleed so much into the final phase of the cycle, which that is kind of the thing that is quote unquote different this time. Like in prior cycles, heading into, let's say, the final blow off top altcoin season, you wouldn't see altcoins being this beaten down, at least not from what I remember and not from what I've seen in my own analysis. The other thing as well to keep in mind in terms of that is that there is a silver lining, and that's that if I'm correct that most existing retail investors have either sold their altcoins or rotated into Bitcoin or minimized their altcoin positions out of frustration, waiting for new retail investors to arrive, buying into all those narratives that altcoins will never rally and all that stuff. If that's what we've seen, then the result is that when we do get an altcoin pump, then those existing crypto investors from the previous cycles, they will become net buyers instead of net sellers. Like if everything had gone according to plan, then they would have been selling aggressively into new people coming in. But now that they've already sold, then they will basically be buying in alongside the new retail, if that makes any sense. And yes, there is, not all the retail are here. This is all myths and stuff that I'll go through later in this video. But this is just basically my theory explanation as to why altcoins have underperformed so much, which again, I do think that's one thing that comes to mind for a lot of people when they're asking about why hasn't altcoin season happened yet. Implicit in that is why have altcoins underperformed so brutally? And I think that's the main reason why is you basically saw existing retail investors arrive earlier than in previous cycles, and they've been gradually selling out of their positions. And again, the silver lining there being that when we do see an altcoin rally, they're all going to be buying back those positions, aping back in, expecting higher highs in Q4. And I think that's going to have some interesting implications for how high the crypto market could go in Q3, because I think you could see a little bit of front running there with everyone aping in like crazy into altcoins over the summer, because they say it's going to be even higher later in the year, and this could actually trigger the cycle top. But anyways, back to, I guess, the meat of the video. So first thing I want to address, there seems to be a big misunderstanding out there, and I will call it a misunderstanding because I think empirically you can prove that it's false. And that's this idea that we need QT and Fed cuts for altcoins to rally. I think this is empirically false. And this is simply because if we look at the 2017 cycle, the Fed was actually doing a mild version of course, now it's doing like mild QT as well. But back then it was doing mild QT, and it was actually raising rates. Like rates are now actually falling. But in 2017, the Fed was raising rates and QT was happening. And of course, altcoins had no problems rallying against that backdrop. And of course, but everyone is kind of stuck in that 2021 mindset, and they're looking at this huge balance sheet increase in 2020 and 2021. And they're saying, well, the Fed has to be doing QT and the Fed has to be cutting rates because that's what happened in 2020 and 2021. But again, that didn't happen in 2017, which, and you can say, oh, because 2017, it was different and whatever. Let's just set all of that aside. Empirically speaking, you cannot say that we need Fed cuts and QE for altcoins to rally, because that was not necessary in 2017, and the crypto market actually had more headwinds in terms of the Fed raising rates back in 2017. Arguably, we can have a debate about what was different around 2017 versus the current cycle. Some would say, oh, it was more retail dominated back then. I guess they didn't see the headlines about how 80 to 90% of spot Bitcoin ETF inflows are not institutions but actually retail. So when people say, oh, it's BlackRock buying, it's not actually BlackRock buying. It's basically retail investors aping into Bitcoin. And Bitcoin's price being propped up by all this like leverage and like MicroStrategy and everything. But let's not get into that. Point being, again, Fed cuts and QT are not required for Fed cuts and QE are not required for altcoins to rally based on the 2017 cycle. We have one cycle where where that didn't happen. Altcoins rallied. We had one cycle where that did happen, and altcoins rallied. So the question obviously then is like, okay, well, if it's not Fed cuts or QE, then what is the kind of macro factor that is required for altcoins to rally? And the short answer, guys, is basically global liquidity. And this is kind of the thing that has been consistent across all cycles. And we're looking here at the global liquidity index here on the Bitcoin Magazine Pro website. And you can see that back in 2017, we saw a sharp rise in liquidity that corresponded to an altcoin or to a crypto rally, with altcoins rallying right at the very end of that. We'll get to that in a second. But you can see that the 2017 crypto bull market, what was the same as in 2021 and what is the same as now, is that we saw a sharp rise in liquidity, then a blow off top. Here we saw the same thing in 2020, 2021, sharp rise in liquidity, blow off top. Here we're seeing a similar thing. Maybe that you could say the liquidity rise is a little bit more gradual, so maybe that's why things are a little bit drawn out. Again, we can have that debate. But the point is that the thing you shouldn't be basically you shouldn't be watching the Fed as much, especially that we're now arguably in a more fiscal dominant environment, like not monetary policy, but you have to watch fiscal policy. And governments all around the world are spending like crazy, even though the central banks have been basically more hawkish, let's say, because governments have been spending so much. This has still continued to boost liquidity higher. So you again, like even just from a macro perspective, and a lot of people, if you guys follow like Lynn Alden, she's been saying that a lot as well, right? Like that you don't have to really pay too much attention to what the Fed is doing. It's more about what's going on with a fiscal policy, because that's the main thing driving global liquidity now. So you can make the case that you shouldn't even be watching the Fed at all, which I don't think is the case. I think you do need to watch the Fed a little bit at least, because the markets do respond to that, at least in the short term. Again, you can see that if this is the thing that was kind of quote unquote different between prior cycles, the Fed cuts and QE, then the thing that is the same is the rise in global liquidity. And that begs the question, it's like, okay, well, how can I track a global liquidity, especially because there's all these different measures out there. You have measure of cross-border capital, you have measures from Real Vision, you have measures from all these different sites and sources. And the question is, okay, but how can I get a sense of where global liquidity is going to go? And in my opinion, in my view, the answer is just to look at the DXY, the US dollar index. Why is that? Because basically a lot of I guess liquidity is kind of like tied up in debts and like in terms of debt refinancing. At least according to Michael Howell, a lot of the liquidity cycle and everything follows the debt refinancing cycle. So basically when it comes to the DXY, when the US dollar gets weaker, this makes it easier for all these companies and countries around the world and individuals, whatever, that have tens of trillions of US dollar debts. It makes it easier for them to pay back those debts because those debts become cheaper. And if their debts become cheaper, then the result is that they have extra money to spend on investing in assets and spending into the economy and whatever, right? So that's why the DXY is so important. When you see a drop in the DXY, that typically corresponds to a surge in global liquidity. And as I mentioned in recent videos, what I believe we're seeing right now is a second leg lower in the DXY, exactly the same like we saw at the end of 2017. There was a second leg lower in the DXY, corresponded to a huge altcoin rally. Exactly like we saw at the end of 2020, second leg lower in the DXY corresponded to a huge altcoin rally. And we are in the process of now seeing a second leg lower in the DXY in 2025. And I do believe that's going to correspond to an altcoin rally. Precisely when is that going to happen? I personally believe it's going to happen in Q3. And again, I do think that the psychological aspect of a lot of people expecting a Q4 cycle top is going to be the catalyst for that. Basically, like if we do get a rally over the summer, which I think that we will, then you're going to see all these, will existing retail investors wait, or will they say, oh my God, the higher highs are coming in Q4, higher highs are coming in Q1 2026, so I'm going to ape in with everything I have now because it's going to go even higher later. And that process of aping in now, i.e. over the summer, will cause the market to top over the summer. That's kind of like my hot take. And the other thing as well is that again, not to throw any shade here or anything, but if I'm not mistaken, by Ben's own analysis, the top of Bitcoin dominance, or the target that he was watching, to my understanding, was around 66%, and that target was actually hit. Of course, could Bitcoin dominance go a little bit higher? I'm sure it could, but everyone who's waiting for Bitcoin dominance to go up to 70% or 70, all the way, like from a technical perspective, to the 73%, I think that's a little bit of a mistake, especially because when you think about how Bitcoin dominance is calculated in terms of all the different underlying variables, like these like altcoin token unlocks and all this different stuff, right? That can really warp it. You can make the argument that that Bitcoin dominance should be even higher because basically we've seen an artificial increase in the stablecoin, in the altcoin market cap as a result of unlocks, right? So you can, like, when it comes to analyzing these kind of like aggregate indicators, and it's part of why I don't really look at Bitcoin dominance too much in my own analysis. It just gets super warped by these types of things, right? So again, it doesn't make it super helpful in my view. And at the very least, you shouldn't be going too crazy about these like little levels, like these little wicks up to 73% and saying, well, then it has to go here, or even down here saying, oh, we saw a drop all the way down to 39%, so it has to go to 39%. I don't think so. I'm looking more at like ranges here, and I do think that we're at the upper level of the range. I do think Ben is right that Bitcoin dominance probably tops somewhere here around 66%. Again, could it go a little bit higher? Sure. But if it goes up to like 67, whatever, is it really that big of a difference if it's like an extra week or two? I don't really think so. We're basically at the top here of Bitcoin dominance, and I do think that it'll fall probably not all the way down to 40%, which sounds like that's what everyone is watching. It'll probably go more to something like just under 50, and I do think that'll be sufficient for a massive altcoin season, especially when you consider that like Bitcoin's valuation is likely to be very, very big in this cycle. Anyways, let's all take a breather. I guess me take a breather. And we'll move on to kind of the next thing, because I'm sure that by this point there's going to be many questions in the comments about like, oh, well, retail investors aren't here, or all the retail investors are already here, or all this type of stuff. So let's go through those things one by one. First of all, what's really crazy, guys, is that the recent rally in stocks was apparently driven primarily by retail, and they were buying stocks at the largest level in 10 years, according to JP Morgan. This was back in April, and basically retail investors were aggressively buying the stock dip in April. They were pushing up the markets in May, and now we're in June at all-time highs. Or I guess now technically in July. But that most of that rally was apparently driven by retail, with institutions sitting mostly on the sidelines. And I actually think we're seeing something similar in crypto. And again, this is evidenced by the fact that something like 80 to 90% of spot Bitcoin ETF inflows are coming from retail, not from institutions. And this coincides to what we're seeing in stocks. So that kind of makes sense to me. Anyway, so we have, again, retail investors, basically, I guess, saying this narrative that retail investors don't have money and no retail investors are here. Well, they're not in crypto, but they're definitely in the markets. They're buying stocks like crazy. And you might think, okay, but they're only chasing the large caps and they're only chasing the indices. That's not true. Some of you guys might have seen a recent report from Goldman Sachs. Trading in penny stocks is booming. It's actually, I think, double or triple. Like, just to put things into perspective, everyone says that 2021 was like the pinnacle of speculation in stocks and crypto. The trading volume in penny stocks right now is I think double or triple the amount that it was in 2021. Okay, so just let that sink in. So you have retail investors buying the dip at record levels, even more than what was bought in dollar terms during the pandemic. And you have them driving up the markets while institutions are sitting on the sidelines. Then you have retail investors trading penny stocks at record levels that are like multitudes larger than what we saw in 2021. And so are you still going to say, oh, but 2021 was the pinnacle and it was superior in terms of speculation and liquidity? I don't think so. I think you can point to a lot of indicators that suggest that's not necessarily the case, but because you don't see it reflected in altcoins, everyone just assumes that, that retail is not here and all this stuff, which again, when it comes to altcoins specifically, yes, retail is not here, but the idea that retail doesn't have any money or that retail is not present in the markets, this is just empirically false, and it's provably false. So then, of course, that begs the question, could we see more retail investors arrive? And I guess just to underscore the point that not all the retail investors are here. So in the US, also in Europe, also in major jurisdictions, of course, I think US, EU plus, I think it's Oceania or whatever. But basically, only a few kind of continents or countries account for like 60 to 70% of all the money invested into crypto. So if you have the US and the EU, you basically have like a pretty good, let's say, finger in the wind sense of like what the breakdown of the crypto market looks like. And of course, there's only around 20% crypto ownership in the US and the EU compared to around 60% for stocks. And now that we have crypto being basically just as accessible as stocks because of the ETFs and all this stuff, then of course that logically implies that we could see the number of total investors, this is not just retail, but the total number of crypto investors actually triple in crypto, theoretically. And I do think that could happen, and we're actually seeing evidence of this. This is a more recent report here from Galaxy Digital, I believe, and they basically found that we are seeing a rise up here. Cryptocurrency ownership in the UK, 24% in 2025 compared to 18% in 2024. So literally what I was just saying, that like this data about like 20% ownership in these EU, US, whatever, this is all data that's kind of obviously a little bit older from 2024. Now we have updated data showing that, yeah, we're seeing gains up to 24%, up to 22%, right? Singapore up to 28%, but up from 26%, so not that big of a jump. But again, the point being that the number of investors in the crypto market is growing steadily, and it could theoretically triple to match that of stocks. So this idea that all the investors are here, all the retailers are here, is just empirically wrong. Okay, get that through your heads, guys. Whoever's saying that like they're just either stuck in the past or just, clickbait or whatever. So again, that begs the question, okay, but then what is going on? What is the missing ingredient? So we have retail that are actually involved in the markets. We have retail that are speculating at all-time levels. What is the missing ingredient? That missing ingredient, ladies and gentlemen, credits to Ben Cowan for this as well. He did a couple videos about it, is attention. There's not any attention right now into crypto. If we just look at buy crypto as a search term over the past 5 years, you can see it's literally at levels not seen since the kind of summer slump of 2024 when the markets were like super down and everything. We don't see any like queries for buy crypto. Some would say, oh, it's not appropriate to do technical analysis on like this type of stuff. I'm very tempted to say that we're kind of in a phase here, like kind of going like an inverse and like about to see a massive melt up in interest similar to what we saw last year. I actually think that's pretty likely over the summer, but all of that aside, the point being is that we can see that interest in crypto, buy crypto, similar terms, is very low right now. No one's really paying attention to crypto at all, which is a bit of a double-edged sword, right? Like on the one hand, it sucks because, nothing is rallying, at least not yet. But on the other hand, that means that we still have potentially a lot more interest that could come into crypto in the coming months. And of course, that would take markets higher, especially altcoins. And of course, that begs the question, what is the catalyst? What would be the thing that causes altcoins to pump specifically in Q3, which is something that I'm kind of expecting. And the main one, I would say, after, doing a bunch of research and looking at all the different crypto projects I'm watching, what they all seem to be watching is the SEC introducing a temporary exemptive relief framework, I think is the full term. Basically, what this would do in practical terms is that it would make everything in crypto on chain basically fully legal in the US, which again, the US accounts for most of the money invested into crypto. I think it's like 40 or 45%, but that's, I think, older data from these on-chain from Chainalysis. I think from their older data, they found it was like 40% or 45%, but I'm sure it's a sizable amount. And again, like when you're seeing like tokenized stocks and stuff going live on Solana, which is accessible to anyone in the world with an internet connection, this is the type of stuff that starts to bring a little bit more attention to crypto. Basically, first thing, I guess, but before that, first thing is that the SEC coming out, dropping all these restrictions and basically saying, okay, you can go nuts, you can do whatever you want, whether you're a crypto company or a bank or whatever, you can do whatever you want on chain and, go nuts. That's one thing, of course, is going to create a lot of activity, a lot of announcements of stuff launching. And another thing that's kind of required, that goes hand in hand with these with this temporary exemptive relief framework, is the Genius Act here. You guys have probably heard that it recently passed through the Senate. It's still waiting to pass through the House. That'll basically make stablecoins legal in the U.S. And of course, stablecoins are the backbone of everything that happens on chain, right? To trade against tokenized RWAs, all this stuff happens primarily against stablecoins, and it's actually going to be really interesting. I do think we could see the entire, or not the entire, or maybe the entire U.S. market structure over time move that it's all trading on chain against stablecoins rather than against fiat, and that kind of basically tricks, let's say, any foreigners that buy U.S. stocks using tokenized RWAs will be buying stablecoins, which are of course backed by U.S. debt, so they're basically like buying U.S. debt without actually knowing it. But anyways, the Genius Act, again, that's another thing to watch that's going to happen probably in the next couple of weeks. Of course, we have the staked Solana ETF, which should have launched by the time you see this video. Maybe there was some issue, maybe it didn't do so well or whatever. But the point is, and the reason why this is so significant, is just take a look at what happened to Circle stock. After it launched, there was all this hype around stablecoins or whatever in the media, and just take a second to consider, what would happen or what will happen or what could have already happened when you start seeing like altcoins like Solana launching spot ETFs. Like not only can I guess that, let me just back up and say the narrative of why Circle is pumping so much is that institutions are super bullish, which I think is just retail, but let's just go with the official narrative and say institutions are super bullish on the stablecoins, and that's why they're investing in Circle, because it's like a pure stablecoin play. But so let me ask you then, guys, how much do you think Solana and these altcoins would pump, given that all these stablecoin use cases are going to be happening primarily on chains like Solana? Not only can you invest now in the stablecoin issuer, or you can also invest in the actual rail, in the future financial system rails, or whatever term they're going to use, right? The future of finance, like actually happening today. You can invest in the rails rather than in the actual assets. And you could make the argument that with something like Circle or some other stablecoin issuer, it's actually superior to invest in the actual rail rather than the individual stablecoin, because of course you don't necessarily know which stablecoin issuer is going to become the most dominant over time, but you can know with relative certainty that, if there's a chain that is super fast, low cost, has most of the liquidity, it's probably going to maintain that dominance. I guess you could say the same also in case of stablecoins. But anyways, yeah, like, stuff like this recent announcement that we got with tokenized stocks being able, like, you can freely trade on Solana apparently with zero KYC, liquidity globally. Like this is the type of stuff that's going to get crypto more and more in the headlines. And again, it's not going to happen all at once. It's going to be multiple announcements, which again, I think will happen only after we've seen the SEC introduce this exemptive framework. I think potentially Solana announcing this is, and even like Robinhood announcing their own tokenized stuff, is a way of kind of front running this announcement. I think they already know that this exemptive relief framework is coming, and they don't want to wait for other crypto projects to be the first. So they're going to come out and be the first to announce that, especially with Solana having connections to the Trump administration and the PayPal mafia and all these guys. And, we can go down that rabbit hole. But anyways, it's really crazy. Like, I think we're going to see a lot of insanity over the summer, especially when you consider Elon Musk, also a former PayPal mafia, considering, I guess, rolling out X payments over the summer. Probably that's probably going to include an integration with Solana for PYUSD for payments. That wouldn't surprise me in the slightest, again, given all the connections between PayPal and all these guys. And that's going to bring, again, you have to think like what are the things that are going to bring more and more attention to crypto. Again, the SEC temporary exemptive relief framework is kind of like the most important thing here. That basically sets the stage. It makes it possible for people to have more announcements like tokenized stocks on Solana, to have announcements like X payments that includes crypto and tokenized stocks, right? Like the first thing that needs to happen is for the SEC to say, yep, have at it, go nuts, like do whatever you want for the sake of innovation, right? And of course, one thing that I do need to mention before we wrap things up is that the launch, and again, I like to look at the crypto market in terms of like history repeating and stuff like that. And one thing that I do find extremely fascinating is that the launch of kind of like these tokenized stocks on Solana reminds me a lot of the launch of Terra's Mirror Protocol. I guess just to quickly recap, for those of you who don't know, Mirror Protocol was basically a DeFi protocol launched by Terra, like the stablecoin that collapsed. And what it basically did is it allowed you to trade synthetic tokenized stocks. So now we have actual tokenized stocks, like Tesla. Before, you could trade like a synthetic Tesla that it would just track the price of Tesla. It wasn't actually backed by Tesla stock, but you could trade that. You can see that Mirror Protocol had a pretty nice boom here. But the main thing is that Mirror Protocol launched in December 2020. And then, 4 to 5 months after that, we saw an absolutely massive rally, not just in the Mirror Protocol, but in altcoins. Here you can see that basically from December 2020, you just saw a massive melt up. And you guys will remember that also corresponds to the drop here in the DXY at the end of 2020. The moment that happened, you get a massive, just literally 6 months up only price action in altcoins. I'm not saying that, or 5 months rather. I'm not saying that's going to happen again this time. I think it'll be a little bit shorter, maybe 3 months. But the point is, and who knows, maybe it'll be 6 months, maybe it'll last until the end of the year. That would be great. That would be cool. I wouldn't be against that, But I do think that, again, when you combine this macro dynamic with the crypto dynamic of people expecting a cycle top in Q4, I think you could set a stage for a very aggressive rally over the summer as everyone apes in, expecting higher highs later in Q4. So again, you're kind of taking the macro and combining it with crypto, so to speak. But anyways, yeah, it's just really interesting to see how history repeats here. And I'm not saying that, like Solana is going to collapse like Terra or anything like that, but I just do find it funny that, last time we saw the launch of a protocol like this that got like significant traction, that just happened to correspond to a massive rally, like a multi-month rally in altcoins, like a massive altcoin season. And also we saw the same thing, of course, again with the DXY falling. So anyways, I guess just again to wrap things up, QE not needed, Fed cuts not needed. What's needed is for global liquidity to be rising, which it is. You could make the case, it's not happening as fast as in the prior cycles. Whatever, the point is that liquidity is rising. And not only that, and more importantly, the DXY is falling, and it's falling aggressively, which foreshadows also a very rapid rise in global liquidity. And that's kind of the thing that is the same, again, as the liquidity rise, and seeing now a second leg lower in the DXY. And maybe you could say, but we have to wait until it gets down to this key level of 92 or 93. Again, like I'm when it comes to these like bigger indicators, things that you're, in the case of the DXY, are comparing to the euro and the yen and a basket of currencies, there's so many like little nuances there that I don't necessarily look for absolute levels. I just look for kind of like similar patterns. And I know that like that's maybe not the appropriate thing to do, and you should be looking for absolute levels. But especially when it comes to something like Bitcoin dominance, like all things considered, we are now basically within a couple of percentage points of the top of Bitcoin dominance. And it's really interesting. I'll just say for the record that, everyone who's been watching Bitcoin dominance and saying you need to be Bitcoin only and wait for the right time to rotate, now their targets are being hit, but they're not saying anything, not naming any names, but you're seeing Bitcoin dominance targets being hit, but people are still all sitting in Bitcoin. I don't know. It's kind of interesting. Maybe speaks to a little bit of a, let's say, risk tolerance differences between different cohorts in the market, let's say. But yeah, like it's super straightforward. Retail investors are involved in the markets. They're just not paying attention to crypto right now. They're speculating at a level that, based on some indicators, is 2 to 3 times higher than what we saw during the pandemic. So this idea of like, you need stimmies and you need all this stuff, that's all BS. We can see that retail somehow, somewhere are getting a bunch of money and speculating more than ever before without these direct stimmy checks, which most of which didn't go into crypto, by the way. Only a small percentage did, according to research from the Fed, which I guess you could question or whatever. crypto adoption, or the number of crypto investors could theoretically triple, and I do think that we can get close to that in the coming months. And once that has happened, then yes, then we can say that everyone has probably arrived, but we're nowhere near close to that now. We can still see a tripling. Launch of ETFs and stuff like this basically, I mean, I don't want to say guarantees, but significantly increases the chances that you will see that that gap close, that you'll see crypto reach parity with stocks in terms of holding and investments. We have basically zero interest in crypto right now, which is the main problem. Again, retail is here, retail is trading, but they're not in the crypto market. They're just somewhere else for the time being. And all that needs to happen is to start getting all these big announcements like tokenized stocks on Solana that brings more retail attention to crypto, especially to altcoins. And that is going to happen after the SEC introduces this exemptive relief framework. It looks like some crypto projects are already front running that with Solana and their tokenized stocks. We have the stablecoin bill also coming out, the Genius Act, which is going to be necessary for a lot of that on-chain stuff, right? Because all these assets are going to trade mostly against stablecoins. And of course, we're also going to see launches of like X payments and stuff happen as a result of the exemptive relief framework, most likely. Anyways, guys, if you did make it this far and you did find that information helpful, then do take a second to check out the Coin Bureau deals page, where we have a 20% trading fee discount and up to $600 of bonuses on Binance. It takes 2 seconds to take advantage of that deal. Just click that sign up now button in the deals page, or the link in the description or in the comments. It'll take you to a page that looks like this. Enter your email or phone number. It takes 2 seconds to sign up. If you're not able to use Binance for whatever reason, then do check out the other deals we have on exchanges like Arkham, which are available to US users, and also other exchanges that are accessible if you're having trouble accessing Binance for whatever reason from wherever you are. When you use these deals, you get a trading fee discount, the exchange gets a new user, and we get a cut of your trading fees. So it's a win-win-win for everyone and helps us out a lot. So take advantage of those deals before they, disappear. And check out the links in the description. And if you did make it this far, once again, smash that like button, subscribe to the channel, ping that notification bell, and I'll see you in the next one.